This is our Forex blog for Wednesday, August 31st, 2011, and we're going to be releasing a new version today that gives you exactly what you see me doing in class, which is our new FX Trend Pro, which is a reformulated composite of 5 different trend tools. 3 measure the direction that all the pairs are going. So in other words, if you see a lot of red here, pretty much all the dollar pairs are going down, or at least 80% of them. And we have 2 trend intensity tools. One of them is a bar by bar analysis. Each one of these lines is 1 5-minute period. You can change it to whatever you want. And the other one is a little bit longer term, measures intermediate time frame trend over the last 6 to 14 5-minute bars, and you can adjust that yourself. And so anytime you see an extreme reading at or above 80 and it's red, that currency is extremely weak, pretty much going down against all the other pairs, and more importantly, it's going down with intensity, which means it's likely to continue going down. Not all the time, but more often than not. And underneath that, we have the real-time, slightly intermediate time frame, last 2 or 3 hour trend, and underneath that we have the daily, weekly, monthly. So if pretty much all the time frames are down on one currency and up on the other, you want to trade that. Last night, a little bit before midnight, you can see the yen was extremely strong. Let's see, the euro was weak at that time. The pound was weak. So coming into today, you could have sold the euro yen or pound yen. Here's the euro yen, and you can see coming into midnight, you're looking to sell. It went down, a little counter trend move, down, counter trend move, down, a little sideways wedge pattern, down again, another 10 pips. It wasn't an astronomical move, but you had the clear trend direction, and it doesn't always move 30, 50 pips, but if you're trading with the most likely trend direction, you're going to find your odds go up. You can see today that the Swiss was strong pretty much on all time frames. The daily trend was up, the weekly trend's still down, but the monthly trend's up, so you'd want to trade that against one of the weaker pairs. The pound was the weakest one until about 7, so the pound Swiss would have been a really high odds one to trade on the downside. Here's the pound Swiss. You have pretty much all the time frames lining up, and look what happened. You look for sells, it drops 50 pips, counter trend move, you would have made 10 to 30 pips on that one. Sideways consolidation breakdown, it fell about 80 pips. You might have gone short here and made 10 or 15, short here and made money. But basically you can see this was the one to trade, and the software very clearly made that viewable to you, at least until about 6. Was very high odds, and the Swiss was the strongest. After a little bit later today, the pound was strong. Now a strong pound could still go down against an even stronger Swiss, but why even waste your time on that pair? A lot of times you get choppy action when they're both strong. The strongest of the two is going to cause the direction, but right here the weakness is clearly in the euro. So what you want to do is you want to trade especially from about 8:05 and after, you want to trade the euro Swiss to the downside. And here's 8:05, and this has also been trending down before that because the euro was weak, but it was off the charts weak at 8:05. You get a little bit of a counter trend move here, and then this thing falls, as you can see, about 120 pips. And you always want to draw your fibs on the last wave to get an idea of where your profit target is. And you also want to use our range bar charts now, so you can get an idea, much better entries. So let's go to a 6 pips per bar chart and look at how this gives you some wonderful trades in this pair. First of all, you're looking at 8 to start to sell it. You have a counter trend trade here, and anytime you have a currency that you want to buy or sell, if you get a counter trend move of 2 is the minimum, but I prefer 3 to 5 or more bars. The first bar that goes red, you go short with your stop right above the high. You can see this pretty much immediately went your way. If you miss that trade, here's another example. 3 bar up, 1 red bar, you go short a pip underneath that bar's low, and you can see that also fell 30 pips. You have another one of those patterns right here, and when you properly size the candle bars, in other words the euro Swiss, if you wanted to create something similar to a 5-minute bar, you just go to add script, and this will tell you how many pips per bar it normally moves. So the Euro Swiss actually moves about 10.86 pips per bar. So 6 was a little bit too tiny for this one. So we'll go to 11 pips per bar chart, and now you have a little bit clearer price action here. You can see the counter trend trade here, and it just went straight down. So this bar chart's properly timed for this currency's normal volatility using 5-minute bars. If you want to use a 15-minute bar, it might be 16 to 18 pips per bar, and you can set that to anything that you want. Let's look at some of the other trades we had today using the currency meter, which you guys will now have as well. For the most part, the New Zealand was strong earlier. The dollar was weak, until the New Zealand got weak around 6. You basically wanted to, I'm going to put this back to a 5-minute chart. You wanted to buy the strong New Zealand versus a weak dollar up until about 6. Now, again, not all the time are you going to get trends that just rock. This was really strong from about 12:30 till about 3. Then it had about an hour of weakness. That strength came back at 4:30 right here, and it really, unfortunately, never took off. You're not always going to have 20, 30, 50 pip moves like you had in the Euro Swiss and the Pound Swiss and many of the other trades you saw today. Sometimes you just unfortunately don't find moves that continue. I mean, that's just the nature of the beast. CAD was weak from about 4:30 to about 6:30, and during that time, again, the CAD was weak, the Swiss was strong. More than likely from 4:30 to 6:30 you're going to find some good trades. Here's 4:30. You got, unlike that other one, this one, did give you the big pip moves. Plenty of 20 to 50 or 70 pip moves. And if you shorted this last little leg up right here, you have the fib target below to shoot for, and it pretty much went right there and stalled. So that's how you use the currency meter and our tools to find the very highest probability currencies to trade. You can see pretty much every one that showed one was strong and one was weak, with the exception of the New Zealand dollar, had some really big moves. Very high percentage of them. Once our software shows one's super strong and one's super weak, and most of the time you're going to find some big moves from it.